Friends, welcome to our third session on income from house property. Many things we have discussed. Today, our plan is we'll be seeing how annual value can be computed for various kinds of house properties. We'll be classifying the house properties into various categories like self-occupied house property, let-out house property, deemed to be let-out house property. There is also possibility that some property may be partly self-occupied, partly let-out, right? And you also know one thing, that sometimes house property may also be treated as stock in trade. In this kind of different situation, how to arrive at the annual value of the house property, we are going to discuss today. That's the plan for it. But as usual, what we'll do very quickly, we'll be recapitulating what we have learned, and we might be solving some questions here.
Oh, no, you first put this out.
So please keep your audio muted, and whenever required, you can unmute and talk to me. I'm going to share the screen with you right now. In the meantime, if you have any query, you may tell me, so that I will try to focus on those areas. Well, let us start the session now. Right. So we already know that is the annual value of the house property, which is chargeable to tax under this head, that is income from house property. House property includes building and land, apartment that may be used for residential purposes, maybe for commercial purposes, right? All these things, assessee should be the owner of the house. But in case assessee is using that house for business and profession, his own business profession, then it is not going to be taxed under this concept. We already know. And various kinds of ownership also we have discussed. We have also discussed the concept of deemed ownership. You can study it here. And this is the computation format. We expect all of you should remember. We need to arrive at the gross annual value. Therefrom, municipality taxes needs to be deducted. And one more thing you have to remember. Yeah, please, friends, please. Please mute your audio.
Is the question.
Yeah. So what we are talking about, that from gross annual value, local authority taxes needs to be deducted. And at that point of time, I had told you one more thing, that this is deductible. This local authority taxes are deductible on payment basis. That means on cash basis only they are deductible. Okay, only when it is paid, local authority taxes will be deducted, and that should be paid by the owner. After deducting local authority taxes, you'll be getting net annual value, right? From net annual value, as you can see, two deductions are there. Can you tell me what are these deductions?
Standard deduction and interest on borrowed capital.
Yes, as you know, standard deduction how much?
30%.
30% of net annual value is the standard deduction. And interest on borrowed capital will be learning that varies. Some situation there is a upper cap up to which you can claim interest on borrowed capital, and some situation there is no cap, you can claim any amount. But one thing you have to remember, this interest on borrowed capital is deductible on accrual basis. That means even if it is not paid, but interest is accrued, then also assessee can claim this deduction, right? Okay, but that is not so in case of municipality taxes, water taxes, etc. Here it is deductible on cash basis, but this is deductible on accrual basis. This concept we have discussed earlier. Hope you have understood that thing. Okay, and this thing also I told you that how to arrive at the gross annual value. We need to know what is the reasonable expected rent, okay, or you can say expected rent. And if the property is not vacant, and for that reason actual rent is lower than the reasonable rent, then it is the actual rent which will be treated as a reasonable rent, or which is the actual rent which will be treated as gross annual value. But in case of property is vacant, this is the treatment. If property is vacant and because of which actual rent is less than reasonable rent, then actual rent. But if the property is not vacant, then actual rent or reasonable rent whichever is higher. This concept we have discussed in the earlier class. Okay.
Yes, sir.
Understood. So this is for this test we can apply when property is let out. If property is let out, we have to see property is not vacant, then actual rent or reasonable rent, whichever is higher. In case it is vacant, and because of that vacancy, actual rent is lower than the reasonable rent, then actual rent has to be taken. This concept we have already discussed. So we have to compute reasonable expected rent, then compute actual rent received or receivable. Gross annual value is normal circumstances is whichever is higher. Okay. Now, how to compute this reasonable expected rent? What you have to do? Find out what is the municipal value. Find out what is the fair rent. Then, if standard rent is available, then find out what is the standard rent. Reasonable rent is the municipal valuation or fair annual rent, whichever is higher, but that should not exceed standard rent. Okay, this concept we have discussed. Municipal rent and fair rent, whichever is higher, you have to take, but you have to compare it this figure with the standard rent, then pick up the lower figure. Then next step is that you have to compare it with the actual rent received and receivable, and you have to take the higher figure. In our real classes, we have discussed this thing and we have solved many questions by using this page. Okay. And from actual rent received or receivable, you need to deduct unrealized rent also subject to fulfillment of certain conditions. Okay, that you have to understand. So after arriving at this stage, that is municipal value, fair rent, whichever is higher, then compare it to the standard rent, whichever is lower, then compare it to the actual rent or receivable, whichever is higher. Then if the property is vacant, you have to give an allowance for vacancy. Okay, vacancy allowance which be deducted from this figure, not from actual rent received and receivable. This concept also I had explained you earlier, and we had solved some questions here. Okay, that you have already done. A recorded video is available. Anytime you can see it. Okay, various questions you have done, and these questions are already over. Okay, then what are the conditions that are relevant for availing deduction under these taxes charged by local authorities? That already we have discussed these concepts. Standard deduction I discussed, interest and borrowed capital I discussed. Then one more thing, what is pre-construction period and post-construction period? That concept we have also thoroughly discussed. Pre-construction period starts from the date of borrowing the loan or date of commencement of the construction, whichever is later. And pre-construction period ends on 31st March of the financial year, immediately preceding the year of completion of construction. And post-construction period starts from the beginning of the year in which construction gets completed. And post-construction period ends when the loan is repaid or property is transferred. Okay. And this post-construction period interest shall be allowed every year. That is, in respective years, the amount of interest which is accrued is allowed. But pre-construction period, how it will be allowed? Who can tell me? Pre-construction period interest.
In 5
equal installments commencing from the year in which post-construction period begins. Right. So we have tried some questions also to segregate. Okay. This also we have discussed what is pre-construction period, what is post-construction period. This concept we have discussed in our previous class. Okay. And one more thing also we have discussed, that in case interest is payable outside India and TDS has not been deducted and payee has got no agent or representative in India, then interest and borrowed capital will not be deducted. This concept we have to also understand. Okay, so up to this we had covered in our previous session. I hope all of you must have come prepared. What we'll do, this is the question we are supposed to try today. Pick up a piece of paper and pen and let us solve this question. As you can see, there are 4 houses. 4 houses means 4 cases, you can say 4 different situations. House A, B, C, D. Right. So you see, these are the items we have to take. We have to see whether it is in this situation interest is allowed or not. Okay. Can you read the situations? 1, 2, 3, 4, 5. First item. Can you read it? Some of you.
Purchase the house but unpaid during the year.
purchase the house but unpaid during the year. You can simultaneously open a table A, B, C, D. You can think of which is to be allowed or not. Then I'll show you the answer. So purchase of the house, that means interest paid for loan taken to purchase a house but unpaid. It has not been paid. So there are 4 houses A, B, C, D. So you decide whether it is allowed or not in all the 4 houses or not. Just tick A, B, C, D under 4 column. If you feel it is allowed, then tick it up. Then I'll show you the answer after some time. Completed first one. Okay. You decide. Completed, yes or no? I'll be showing you answer at a later stage. Interest paid to purchase a house, but interest is not paid. It is unpaid. Meaning interest is accrued but not paid. Second situation. Can you read it?
For repair of the house.
For repair of the house, loan is taken and interest is paid. You decide whether it will be allowed as deduction or not. Third, for repayment of interest on prior loan. That means this loan is taken to repay the interest part of a prior loan. You have to decide whether it is allowed or not. Previous class I had discussed this thing. Okay. Fourth, for repayment of previous loan taken for purchase of a house. Okay. That means for repaying the previous loan, repaying the principal part of the previous loan, this loan is taken. You have to decide whether it is allowed or not. Okay. 1, 2, 3, 4. Point 5, can you read?
By mortgaging house C for business purpose.
This house C is mortgaged and interest is 6,000 rupees. And it's a business purpose. Loan is taken for business purpose. You have to decide whether this is allowed or not under this head. Under the head income from house property, whether this interest will be allowed or not. Point 6. What is 6?
For payment of municipal tax.
Municipality taxes payment. This much of that means this means this is not municipal tax. This is the interest on a loan taken to pay municipality tax. This is the amount. You have to decide whether it is allowed. Point 7. Can you read?
By mortgaging house A for renovation of house B.
That means for renovation of house B, it is taken, but house A is mortgaged. So you have to decide for which house this interest will be allowed, for A or B. Okay, A is mortgaged, but loan is used for house B. Point 8.
For reconstruction of house A paid outside India without TDS.
Yes, this you have to see. This is for reconstruction, but interest is paid outside India without TDS. You have to see whether it's allowed or not. Point 9.
For reconstruction of house B paid outside India without TDS and no payment has been made.
Yeah, this also you have to decide. Reconstruction of a house B paid outside India without TDS. Okay, you quickly decide. I'll be telling you this. Okay. This is the answer. First, let us say. To purchase of the house, what do you say? It is allowed or not?
It is allowed.
Allowed in all the cases. Good.
Yes, sir.
For repair of the house,
Allowed, sir.
allowed in
It is
all the
all
cases. For repayment of interest on a prior loan,
Not allowed.
not allowed.
not
Not
allowed.
allowed. Good. Then for repayment of the previous loan taken for purchase of a house,
Allowed.
allowed. Very good. Allowed. By mortgaging house C for business purpose,
Not allowed.
Not allowed.
Not allowed. For payment of municipality tax.
Not allowed.
Not allowed. So as you know, it is allowed only for repair, purchase, construction, repair, renovation. It's allowed. Then mortgaging house A for renovation of house B. For which house it is allowed?
On house B.
House B it is allowed. Good. For reconstruction of house A paid outside India without TDS.
Not allowed.
Not allowed. Okay. Then for reconstruction of the house B paid outside India without TDS. Okay.
Not allowed. Yes, sir.
Here also it is not allowed. No payment has been made means that means interest has not been paid. Interest is due. Still then it is not allowed. Okay.
Yes, sir.
So total interest allowed is this one per person. I think this interest part is clear. Okay.
Yes, sir.
Well, now friends, now having understood this with this background, now what we will do to compute annual value? We are going to classify the house property into various categories. Right, these are the broadly 4 categories. Of course, one more category already we have discussed, but again we'll discuss, that is house property which is treated as stock in trade. That's different thing. In that case, treatment will be different. Otherwise, we are going to classify the house property into this 5 categories. Can you read out what are these categories? First category,
Self-occupied property.
self-occupied house property. That means owner is occupying that thing. Owner is staying in that property. Either owner or his family is using that property. Next is, what's next?
Let out
Let out
property.
Let out means property is given on rent. Third case,
deemed to let out.
deemed to let out means it will be assumed to be let out. Okay, even if it might be self-occupied, but it will be still assumed to be let out property.
So can you give an example of this?
Yes, I will be explaining all these things in due course. Just wait for some time. First, after understanding this self-occupied property only, we will be thinking in which situation this self-occupied property will be treated as deemed to be let out. So first we need to understand this, right? So all these concepts, all these types of properties, I will be explaining you today. Okay. So just at this stage, just keep this thing in your mind that there is a kind of property which may be assumed to be let out. We'll be calling it as deemed to be let out. Okay.
Yes, sir.
Okay. Yeah.
Yes, sir.
Now, unoccupied house. This is fourth category. Unoccupied means it is not given on the rent. Owner is not occupying also.
Vacant.
Vacant. Okay. What is the last category?
Partly self-occupied and partly let out property.
Partly self-occupied and partly let out property. Right. So that also we'll see. What is partly self-occupied, partly let out? You must be able to understand that. But here one more concept we have to keep. Let out property includes a property which is let out even for the part of the year. That means, let us say, the property is let out only for 2 months. At 10 months, it is vacant. What will treat it? Whether it is a let out property or other kind of property. Still, it will be treated as let out
property.
Okay, even for a part of the year. But it should not be self-occupied for the part of the year. Okay, if it is, it should not be let. That means what this point is saying, that if it is let out for the part of the year and other part it is vacant, then we'll also treating it as the self-occupied. Also treating it as the let out property. Okay, but if it is self-occupied, then different thing. Then it may be partly self-occupied, partly let out. That's a different thing. But if it is let out and vacant, then it will be still treated as a let out. Did you understand this concept?
Yes, sir.
Now, to understand this concept, I am showing you some example. Now let us understand what is this example. Okay, which situation? Are you seeing the table now?
Yes, sir.
Yes, sir.
Now you
Yes,
see,
sir.
Yes,
these are the
sir.
various houses we are talking about. Let us say this column talks about period of let out. This talks about period for self-occupied. Then talks about vacant. Then we'll see how we'll classify this. Let us say it is 12 months let out. Then we should treat that house what? Entire 12 months it is let out. Then what kind of
Let
house is that?
let out a house.
Let out house. No doubt about this. Entire year it is let out. But let us say 6 months let out, 6 months vacant. What we will treat it?
Let out house.
Let out because of the concept I told you right now. Okay, let out plus vacant. This let out. But 11 months let out, but 1 month self-occupied. What will treat it? Can you treat it as let out house?
No, sir.
No. What you will be treating it? What kind of house is that?
Partly self-occupied and partly
Partly
let out.
self-occupied.
Okay. Now let us see. Fourth, it is not let out, not self-occupied. 12 months it is vacant. What will the treatment?
Unoccupied
Unoccupied
house.
house.
Unoccupied.
Unoccupied house. Okay, or deemed to be let out house. We'll see that concept again. Let us say it is 12 months self-occupied. It's not let out, not vacant. Entire 12 months is self-occupied. What will treat it?
Self-occupied house.
Self-occupied
Self-occupied.
house. Good, no doubt about it. And if it is 11 months self-occupied and 1 month vacant, it's not let out. Self-occupied plus vacant.
Self-occupied.
What will treat it? Self-occupied house. Okay. Did you understand this concept?
Self-occupied house.
Okay. Did you understand this concept?
Yes, sir.
Okay. Just a minute. Yeah. Are you seeing the screen?
Yes, sir.
Okay. There is a small amendment. So let me make it in the last. Yeah. Here one concept. Again, I will be explaining on appropriate time. If the assessee has more than 2 self-occupied houses, okay, 2 of them, that means either 1 or 2 or both the houses, by choice, by assessee choice, can be considered as self-occupied house. Other houses shall be deemed to be let out house. Okay, now I think you got some idea about what is deemed to be let out house. Let us assume assessee has 3 houses. Okay, assessee can assume 2 of them are let out and the third one is a deemed to be let out house. Even if it is not let out, it is self-occupied. Did you understand this?
So can you repeat this again?
Please read the last note. If more than two self-occupied houses are there, 2 of them by choice can be taken as self-occupied house, and others shall be deemed to be let out houses. So this situation will come.
Two of them by choice means what?
By choice means assessor will exercise his choice, his option. Let us say 3 houses are there, house A, B, C. Okay, you may choose A, B, B, C, or C, A, any 2 by choice.
Okay, sir.
Right? That is
Yes, sir.
assessor's option. He's practically he's self-occupying 3 houses, but 2 he can claim as self-occupied house. Other one shall be, even if it is self-occupied, it shall be deemed to be let out house.
Deemed to be let out.
Deemed to be let out house. Okay. So this point you need to remember, and you need to not only remember, you have to give importance to that. Why you have to give importance to that? Because earlier it was 1 house. Now it has been amended to 2 houses. Understood? So this is the change in the law. So therefore, please remember this thing. Okay? Understood? Yes or no? Now RCC can claim 2 houses as self-occupied house. Right? Now, friends, let us understand what is self-occupied property. Are you ready?
Yes, sir.
Okay. Again, I repeat, how many kinds of house property I told you? Self-occupied, let out, deemed to be let out, unoccupied, partly self-occupied, partly let out. Each of these property we'll be discussing separately. We'll try to understand what are these property. And one more category, that is about house property which is held in stock in trade, that also will be discussed. First, let us see what is the first category of property. Can you read the heading?
Self-occupied property.
Section 2, subsection, section 23, subsection 2, clause A. Okay, so when you talk about self-occupied house, what I mean, it is self-occupied by the owner or his family for residence. It can be self-occupied for part of the year and remain vacant for remaining part. This concept we have discussed earlier. If it is partly in part of the year, it is self-occupied, other part is vacant, still it will be treated as self-occupied house. But it must not be let out. If it is let out for any part of the year, then the nature of the house changes. It will become what kind of house? If during the year, let us say it is self-occupied 10 months
Let out property.
and self-occupied 10 months and let out for 2 months. What kind of house is that?
Partly
Partly
self-occupied and partly
self-occupied, partly let out.
Partly let out.
Okay. But one more thing, it must not be vacant for the whole year. If it is vacant for the whole year, it can be unoccupied house or deemed to be let out house.
Sir, both are same or different? Deemed to be let out and unoccupied house. These
I'll
two
be
are
telling you
same
at
or different?
appropriate point of time, they are different. Okay, so one by one we'll be discussing. All right. So now, next point is that this benefit, which is available, this self-occupied house property will be getting some benefits. Benefit is that we'll be telling you that benefit shortly. That is, annual value will become nil, etc. So this benefit is available only for whom? Individuals and HUA. Right, only individuals and HUFs can avail the benefit of self-occupied housing. And the house shall not be treated as self-occupied house if it is occupied in some other capacity. Some other capacity means, I'm giving you an example. Suppose employee is owning the house. Right, employee is occupying the house, but he has given the house to on lease to the company, to the employer, and employer has allotted that house again to the employee. Are you getting? So practically, employee is staying in the same house, but house was given on lease to the employer. Employee has allotted it, the same house, to the employee as rent-free accommodation. If that is an example I'm telling you. If this kind of situation, the employee is occupying the house, but in the capacity of an employee, not in the capacity of the owner. In that situation, house property will not be treated as a self-occupied house. Okay, did you understand? So if the assessee is occupying the house in some other capacity, not in the capacity of the owner, then it will not be treated as a self-occupied house. Okay, understood these concepts?
सर तो फिर उसको क्या कंसिडर होगा?
हाँ, क्या consider होगा in the sense? First of all, you understand that is not self-occupied in the capacity of the owner.
Yes, sir.
Okay, here only when the owner, in the capacity of the owner, is occupying or his family members are occupying, then it will be treated as a self-occupied house. Right? Okay.
Yes, sir.
And your question is that how that house will be treated. You tell me how that house will be treated. You have already studied the chapter salaries, and you know what is the treatment of a rent-free accommodation. Yes or no?
Yes, sir.
Yeah, it will be treated like that in the hands of employee. Okay.
No, sir, I'm not getting.
What is your question?
Sir, I'm asking that if it is not treated as a self-occupied, then what we will treat this house?
You see, That is it a house, first of all? House for the person. What is the question? The assessee has given the house on rent,
Yes,
on
sir.
lease, on lease. It's not self-occupied. So it is not a
Yes, sir.
self-occupied house. Okay, it
Yes,
is not
sir.
a self-occupied. What he has done? He has the leased the property. This example you are talking about, right? He has leased the property. Your point is that how house will be treated in the hands of the employer or house employer? You are asking.
Employee who is
Employee.
living on the house. Yes, sir.
Yes,
Occupying the
employee
house.
is living. Now you tell me. First of all, this thing. Employee has given the house on lease.
Yes,
Okay.
sir.
Okay.
Yes, sir.
That lease income, maybe his income from other sources, maybe his business income, depends.
Okay, sir.
Okay. But he's not the owner of the house, since he has given the house on lease.
Yes, sir.
Okay. Then what
Yes,
treatment you want? And he has got the house as a rent-free accommodation. Rent-free accommodation. Okay. The way rent-free accommodation is valued as a perquisite, the same way it will be valued. Right.
So
In
then it
salary chapter, we have studied that.
yes, sir.
Okay. In same way that will be studied, that will be valued and it will be treated as a perquisite for the employee.
Okay, sir.
Okay. Is it clear or still there is some doubt?
Yes, sir. No, sir.
Okay.
It is clear.
Right. Now, we are also talking self-occupied house has got some benefit. First thing is that the net annual value or NAV shall be treated as how much? Nil. What is NAV? You have remembered? What is NAV?
Net annual value.
Gross annual value minus municipality taxes. Okay. Okay. Now after deduction, now here we are talking about NAV is nil. So straightway you can arrive at net annual value is nil. So if net annual value is nil, thereafter only two deductions are possible. Can you tell me what are the two deductions? In any situation we have studied.
Standard deduction and interest on borrowed capital.
Standard deduction and interest on borrowed capital. Here also standard deduction also will not be there. Only one deduction is there, that is what? Interest on borrowed capital. Okay, if capital is borrowed, the maximum amount of interest which is allowed is 2 lakh. But in case loan is taken before 1st April 1999, the interest, maximum amount of interest which is allowed is only 30,000 per annum. Okay, if it is taken before, loan is taken before 1st April 1999. Otherwise, if it is a recent loan, then how much interest is allowed? Maximum 2 lakh rupees interest is allowed. Understood? Yes or no?
Yes, sir.
So that means NAV is nil, NAV is 0, and only one deduction is allowed, that is interest on borrowed capital 2 lakh rupees. So 0 minus 2 lakh. So income can be negative, right? And with the old loan, it is not 2 lakh, it is 30,000. So under self-occupied house property, the advantage is that one can have negative income. Negative income maximum to the extent of minus 2 lakh. One can have the income of negative income or the loss of minus 2 lakh under this self-occupied house property. Did you understand?
So can you please explain how the negative income is coming? I could not hear properly.
You see, how you arrive at the annual value. First you arrive at the gross annual value, then less municipality taxes. You'll get net annual value, right? But here, in case of self-occupied property, you have to take net annual value in 0. Then there is no standard deduction. Only one deduction, that is interest on borrowed capital, that is 2 lakh. So 0 minus 2 lakh, what is the taxable annual value? Income from house property, what will be that? 0 minus 2 lakh.
Minus 2 lakh.
So minus 2 lakh.
Minus 2 lakh.
Minus 2 lakh. Okay. So income will be treated as minus 2 lakh. Suppose your salary income is 12 lakh and income from house property is minus 2 lakh. So your total income is 10 lakh. 12 lakh minus 2 lakh. Okay, you might be having income from different heads, but income from house property can be minus 2 lakh. Are you getting?
Yes, sir.
Sir, this 2 lakh is always fixed.
No, maximum 2 lakh means up to 2 lakh. It depends how much of interest is accrued and it is allowed on accrual basis. You need not pay how much interest is accrued in that loan. Right? You may ask the banker to give you a certificate how much during the year you must have paid during the year how much of interest has been accrued. So that amount will be allowed. Maximum 2 lakh. Suppose you have paid or interest accrued is 2.5 lakh. Only 2 lakh is allowed.
Okay, sir.
Okay. And to avail that 2 lakh, you have to see this condition. Loans must have been taken on or after 1/4/1999, because prior to that amount was only 30,000. Loan must be for purchase or construction of the house. Construction must have been completed within 5 years from the end of the financial year in which loan is taken. And lender must be obtained a certificate for fulfillment of all these conditions. So the certificate may be produced. Okay, so on that basis, interest up to 2 lakh rupees is allowed. And this 2 lakh rupees, again, you have to remember, pre-construction period is allowed, period interest is allowed in 5 equal installments. Is it not? And post-construction period is allowed in respective years. The 2 lakh upper limit is for both pre-construction and post-construction taken together. Both the interest you have to compute. You have to find out how much is the interest. Then up to 2 lakh rupees can be allowed as a deduction. Consequently, income may become negative, maximum to the extent of minus 2 lakh rupees. Did you understand?
Yes, sir.
Okay. Right. Okay. Let us move. Okay. Here at this stage, I'll unoccupied property again separately. I'll be explaining. Okay. At this stage, let me explain you. Where the property is self-occupied for own residence or unoccupied throughout the previous year, its annual value shall be nil in this situation. Okay, provided no other benefit is derived by the owner of the property. And here, what is the meaning of unoccupied property is that unoccupied means normally what you understand. Property is no one is occupied, right? But here it refers to property which could not be occupied or which cannot be occupied by the owner by reason of his employment, business, profession at different places, and he resides at such other places in the building not belonging to him. That means, let us say he is working in elsewhere. So naturally his property may remain unoccupied because he's working in a different place and is residing in a different house which is not owned by him. And or his business is in a different place and he's residing in a house there in a building which is not owned by him. If for that reason a property is not self-occupied, that is not self-occupied for this reason, then it will be treated as an unoccupied house, and in that case also annual value shall also be taken as nil. So for self-occupied house, annual value is nil. For unoccupied house, annual value is what?
Nil.
Again nil. Okay. And unoccupied means what? Unoccupied due to region of employment, business, profession. Okay. Because of these reasons, the assessee might be staying in a different place, in a different building, which is not owned by him. If for this reason house is unoccupied, that will be still treated. Annual value of that house shall still be taken as nil. Okay.
Yes, sir.
Yes, sir.
Okay. Now, then again related to self-occupied house, one more thing I'll be telling you. As I told you now, two benefit of this benefit. This is a benefit or not? Benefit in the sense you got a house, but income is becoming negative to the extent of 2 lakh rupees. So ultimately your total income will be reduced.
Yes, sir.
Is it not? So this is a benefit.
Yes, sir.
So this why this benefit is happening? Because annual value we are taking nil. That's why we are getting this benefit. The benefit is coming because annual value is nil. So the benefit of nil annual value is available only up to 2 self-occupied houses or unoccupied houses. Okay, up to 2. Up to 2 means either for one house or for 2 houses. Maximum for 2 houses. And this benefit is allowed only to an individual or to HUF. So as you have seen, as I had told you earlier also, NAV will be treated as nil, 0. Okay. Therefore, there will be no deduction from municipality taxes. Only one deduction. There will be no standard deduction also. Only one deduction. What is that? Interest and borrowed capital.
Yes, sir.
Okay. Only one deduction, that is for interest and borrowed capital, because of which income can become negative. Okay.
Yes, sir.
Right. Now, unoccupied house, you have understood what is unoccupied house? Yes or no?
Yes, sir.
Okay.
Yes.
What will the annual value for unoccupied house?
Nil.
Nil.
Nil, and interest on borrowed capital is allowed. What is the annual value
Yes,
for
sir.
self-occupied house?
Nil.
And interest on borrowed capital is allowed. Right.
Yes, sir.
Now we'll be learning one kind of house, that is deemed to be let out house. What is deemed to be let out house? I had told you, but again I'm repeating this thing. In case more than 2 self-occupied house, let us assume assess is having 5 self-occupied houses. All are self-occupied. Then any 2 of them shall be treated as self-occupied. How many? Only 2 of them shall be treated as self-occupied. And what about others? Let us say assess is having 5 houses. Any 2 will be taking as self-occupied. Other 3 shall be treated as
Deemed to be let out.
deemed to be let out. Are they let out? No, but they will be assumed to be let out. This shall be
Okay, sir.
deemed to be. Okay, and this
Yes,
is as per assessee option. Assessee ka marji. Okay, it is up to him. Let us say house A, B, C, D, E. Assessee may choose A, B, B, C, C, E, any 2. Which houses assessee will choose? Naturally, whose annual value is highest? Top 2
Yes,
will,
sir.
because that will become 0. He has to pay less tax.
Yes, sir.
Isn't it? So naturally, assessee will choose those houses whose annual value is maximum. He'll pick up those houses. So he'll say, these 2 are my self-occupied. Other thing, you treat it as deemed to be let out. Okay. And it's not necessary that once you have selected these 2 houses as self-occupied, always it will be self-occupied, not like this. You may change option. This year you may say A and B house. Next year you can say D and E. Next year you can say E and B. Every year this option can be changed. Changed in such a way that it is beneficial to the assessee. Okay. So ideally what I will do, assessee will arrive at the annual value of all these properties. And he will pick up 2 houses where annual value is maximum. I will say this is then annual value. These 2 are self-occupied. Consequently, annual value is 0. Other houses shall be treated as deemed to be let out. Okay.
Yes, sir.
Okay. Once it is deemed to be let out, actually you see it is not let out, but we are assuming it to be deemed to be let out. Is it not? We are only assuming, but as actual. So if that is so, there will be no actual rent because it's not let out. Actual rent question will not arise.
Yes, sir.
Okay, so we are comparing expected rent with actual rent, but here actual rent is not there. So what will happen? The expected rate shall be treated as the gross annual value.
Okay.
Okay. Expected rent shall be treated as a gross annual value. There is no question of vacancy allowance. Okay, vacancy allowance will not be there.
Yes, sir.
Okay, municipal taxes actually paid by the owner during the year in respect of deemed to be let out house can be claimed. It is deemed to be let out, so just like let out houses, municipality taxes can be claimed. If it is paid, that can be claimed. In self-occupied house, municipality taxes cannot be claimed. Right, but in these houses, deemed to be let out house, municipality taxes can be claimed. Did you understand this?
Yes, sir.
Yes, sir.
Okay,
So why municipal taxes can't be claimed in self-occupied houses?
sorry.
So why municipal taxes can't be claimed in self-occupied property?
Yeah, it cannot be claimed. In self-occupied houses, NAV shall be taken as zero, and NAV comes after adjustment of municipality tax.
Okay.
Okay, so after deducting municipality taxes, net annual value is zero. So there cannot be any loss on account of municipality tax. There can be loss on account of interest and borrowed capital. Okay, understood? Now,
Yes.
one typical point. In case of joint home loans, many times you can find home loans are jointly taken. Two people are taking a home loan jointly. Maybe they are spouses, maybe husband and wife, maybe two brothers. They are jointly taking a home loan. In case of joint home loan, each owner can avail deduction up to 2 lakh rupees on interest payment. Okay, owner A can claim, owner B can claim. Because what the law says, owner can claim deduction on interest on borrowed capital. Owner includes joint owner. Okay, suppose in a housing loan, total interest paid or total interest accrued is 5 lakh rupees and is joint owner. Okay, owner A can claim 2 lakh rupees, owner B can claim also 2 lakh rupees. Did you understand?
Yes, sir.
Okay,
Yes, sir.
interest is allowed. Okay, one more relevant point also here. Interest is allowed as a deduction under the head income from house property, right? Under section 24B, it is allowed. And the principal amount of loan which is paid, that is allowed as a deduction under 80C. 80C, you know, from gross total income, 80C deductions are allowed so that we can get the total taxable income. Okay. Okay.
Yes, sir.
And in case joint property also, both the members which are listed as the co-owners are also eligible for tax deduction of rupees 1,50,000. Okay, on the principal amount. If principal amount is paid on the housing loan, so each member can claim up to 1,50,000. Okay, both member can claim. Are you getting? So this is the advantages of joint ownership. Individually, each owner can avail the benefit of interest. Each member can also avail the benefit of principal payment under 80C. Okay, are you getting? Yes or no?
So it means each of the members can get exemption of up to rupees 1,50,000 on the principal amount.
Yes. 1,50,000 rupees, 1,50,000 rupees, 3 lakh rupees can be claimed, provided
Okay.
3 lakh rupees has been paid. Okay.
Okay, sir.
Right? Understood?
Yes, sir.
And same also a loan amount, 2 lakh rupees, 2 lakh rupees, 4 lakh rupees can be claimed. Understood?
Yes, sir.
Okay, so this is about self-occupied house property. Next, we'll be talking about let-out house property. Okay, and let-out house property, please understand. Here we have to first of all compute gross annual value. You know how to compute gross annual value. Then deduct municipality taxes paid. That is actually payment when made, it will be allowed a deduction. Then you are arriving at the net annual value. Then deduction under section 24. 24A talks about standard deduction of 30% of NAV. And 24B talks about interest on borrowing capital. And in case of self-occupied house, there is a limit up to 2 lakh rupees. Is it not?
Yes, sir.
Yes, sir.
Here, there is no ceiling. That means any amount you have paid as interest on borrowed capital shall be allowed as deduction.
Sir, all the amount will be allowed as deduction.
Yes. There is no ceiling limit so far as interest on borrowed capital is concerned if property is a let out property.
Okay, sir.
Understood?
Yes, sir.
Okay. Now, but when I say it is allowed in the year means that amount is allowed. But there is a provision with effect from assessment year 2017 and 18. As per that provision, what happens? In a particular year, you see, if let us say without interest, it is allowed. Sorry, any amount of interest is allowed. Let us say interest is 10 lakh rupees. 10 lakh rupees is allowed. Is it not?
Yes,
So
sir.
because of that, let us assume the loss from let out house property can be minus 10 lakh rupees. Income from house property can be minus 10 lakh or loss can be 10 lakh rupees. Okay.
Yes, sir.
That possibility is also there because of interest. And there is a bar for allowing that interest in a particular year. Interest is allowed, any amount of interest is allowed, but in 1 year, maximum 2 lakh rupees. That means other interest can be carried forward to the next year. Okay. Now, please read this paragraph. Though there is no bar on the amount of home loan interest that can be claimed as a deduction under section 24 for a rented house property, the losses which could arise on account of such interest payment can be set up only to the extent of 2 lakh rupees. That means, suppose your interest is 6 lakh rupees. 6 lakh rupees allowed, is it not? But in 1 year, up to 2 lakh rupees can be set up. Balance 4 lakh rupees can be carried forward to the next year. And it can be carried forward for 8 assessment years. This unobserved loss can be carried forward till 8 assessment years. Okay, are you getting?
Yes, sir.
Okay. So those who are filing return, they may feel that interest is allowed any amount in case of let out house, but only 2 lakh rupees can get set up. Remaining 6 lakh rupees or any amount above 2 lakh rupees will be only carried forward to the next year. Okay, did you understand this?
Yes, sir.
Yes, sir.
Okay, so 2 houses I covered. One is self-occupied house, second is let out house. Let out house property is simple thing, municipality taxes, standard deduction, interest on borrowing capital without any limit will be allowed, right? Okay, deemed to be let out house. Next concept is deemed to be let out house. Deemed to be let out house, I had explained you that concept, but again, as a separate category, let me quickly explain you. You know what is deemed to be let out house? When more than 2 houses are self-occupied, right?
Yes,
Any
sir.
2 of
Yes.
them can be treated as self-occupied, others shall be deemed to be let out. As you may choose any 2 house, and the choice may vary from year to year. Okay, and there will be no actual rent, no unrealized rent. The reasonable expected rent shall be treated as the gross annual value. Okay, thereafter it will be treated just like a let out house. That is the treatment. You can summarize: deemed to be let out house shall be treated as a let out house only. But only difference is that there is no actual rent. You cannot compare it. There is no vacancy allowance. There is no unrealized rent. These concepts are not there. Otherwise, this shall be treated as a deemed to be let out house. Otherwise, that means similar to a let out house. Okay.
Okay, sir.
Okay. Now, unoccupied house. You are asking a question: what is the difference between unoccupied house and deemed to be let out house? Now, let us understand once again. I had already briefed you, but let us still repeat this thing as a separate category. Assessee has a residential house meant for self-occupation, but he couldn't occupy it due to employment, business, profession, etc. Okay, and such house is practically vacant and there is no benefit is derived that from, then it will be treated as an unoccupied house or vacant house. Assessee is residing in a house which is not belonging to him. In that case, net annual value shall be treated as nil. That means just like a self-occupied house. Standard deduction is nil. Interest on borrowed capital, maybe 30,000 or maybe can go up to 2 lakh rupees. You know, whether it depends, it's an old loan or new loan. And in this case also, interest from house property shall be treated as may become negative. Okay. Okay, even if it is occupied, it will be treated that means just like self-occupied house. It is even if it is not unoccupied, it shall be treated as a self-occupied house. You see, everything is similar to self-occupied house. But in case assessee has already availed a house, self-occupied house, then he cannot again claim this benefit. That means assessee cannot claim the benefit of both self-occupied house and unoccupied house for the same house. Okay. Did you understand?
Yes, sir.
This is called unoccupied house or vacant property disability. Okay, then next concept is about this partly self-occupied house and let us say partly let out house. When we talk about partly self-occupied house and partly let out house, the partly self-occupied and let out can be area wise, that means the part of the house can be self-occupied, other part can be let out, or time wise, maybe 6 months it is self-occupied, 6 months it is let out, or it can be area wise as well as time wise. House has got two parts, one part is self-occupied, other part is let out. Okay, let out house is again partly self-occupied, for part of the period is self-occupied. So that possibility is also there. So when we talk about partly self-occupied and partly let out house, we can divide it as area wise, time wise, as well as area wise and time wise. Okay, did you understand?
So, what is the meaning of that? Area wise as well as time wise?
Okay. Area wise
Okay.
means let us say 50%, 50%, half the house, half the house. Okay, and that half also, let us say time wise, 6 months it is self-occupied, 6 months it is let out. So it is area wise as well as time wise.
Okay. Okay.
Okay, this is how we can divide. So first let us say partly self-occupied, partly let out area wise. If it is area wise, then self-occupied person and let out person shall be treated as if they are two different houses, two separate houses. Okay, and self-occupied shall be treated as self-occupied house and let out house, let out portion shall be treated as a let out house. Income shall be computed separately. Okay, rent,
Yes,
municipal taxes, interest shall be divided in proportion of area. And actual rent, unrealized rent, etc. shall be only for the let out portion only. Self-occupied portion NAV will be treated as nil. So actual rent received or receivable, unrealized rent shall be only for the let out portion. If area wise you are dividing. Okay, that means we have to bifurcate the house into two parts. Okay, and municipal valuation, fair rent, standard rent, everything needs to be a portion on the basis of area. Maybe on the basis of plinth area, maybe on the basis of built up area, or some reasonable basis. We have to apportion the houses. We have to bifurcate the houses as if they're two houses. Understood?
yes, sir.
Yes, sir.
If it is time wise, then there will be no benefit for self-occupied period. Income shall be computed as if the house is let out throughout the year. But actual rent received shall be only for the let out period only. Okay, so how we'll do? How we'll calculate? First, calculate the reasonable rent for the whole year. Calculate the actual rent received or receivable for the let out period. Okay, the reasonable rent or the actual rent. Gross annual value will be higher of 1 or 2. But as you know, however, if step 2 is higher, that means actual rent is higher. Sorry, step 2 is less, actual rent is less due to vacancy period. Then step 2, that is actual rent, shall be treated as the gross annual value. You already know this concept.
Yes, sir.
Okay. Right.
Yes, sir.
Self-occupied period cannot be treated as a vacant period. Okay. If fair rent is not available, the same shall be computed by using actual rent received or receivable. Okay. But in this case, if house is partly self-occupied and partly let out, municipal taxes for the whole year can be allowed. But when it's area-wise, we have seen what we are doing. Municipal taxes was proportionately we are dividing. But when it's time-wise we are dividing, then we are treating it as if it is let out for the whole year. And municipal taxes for the whole year will be deducted. Okay?
Yes, sir.
Yes.
Are you getting?
Yes, sir.
Now, if it is area-wise as well as time-wise, then we shall apply both the features of area-wise what you have learned just now and time-wise for the self-occupied and partly let out. Partly self-occupied, partly let out person. So both the features that you have learned, that has to be applied. Okay? Did you understand up to this?
Yes, sir.
Then one more category is also there, that is house property treated as stock in trade. What we will do, I will expect that you come prepared to the next class again. We will do a very quick recapitulation of all these heads, all these kinds of house property. And if possible, we will do some problem also under each category. Then it will be more clear. But to do that thing, it is expected that you should come prepared. Next class, study whatever is taught to you in this class. Just have the brief understanding that how income is to be computed for different kind of houses. Self-occupied house, let out house, partly self-occupied, partly let out, all these things. If you come prepared, we'll be able to solve some questions. Will that be fine?
Yes.
Yes, sir.
Yes,
Okay
sir.
then, so
Yes,
thank you
sir.
very much. We'll catch up in the next class. Thanks a lot.
Thank you,
Thank you,
sir.
sir.
Thank you.
Thank you,
Thank you,
sir.
sir.
Thanks.